Hello, greetings, and welcome to Dividend Blasters. This is our 26th video. The topic today, dividend increases announced in April. Quick disclaimer, I am not your financial advisor. Purpose of this video is for information and education, reflects my own personal opinions and my research. So before making any major financial investment decisions, do your own research and due diligence and consult a licensed professional financial advisor. Having said that, I've been an independent investor for more than 30 years. However, before I make any key financial investment decisions, I pick up the phone and I contact my own licensed professional financial advisor for their advice and expertise. In the end, it's my decision. Sometimes we agree, sometimes we don't. But take advantage and leverage their expertise. That's what they're there for. Let's press on. So there were over 70 stocks that announced dividend increases in April. I have identified 9 worthy of your consideration. They are Costco, Discover Financial Services, Travelers Companies, J&J or Johnson & Johnson, Qualcomm, Procter & Gamble, MCOR Group, FedEx, and Constellation Brands. What you see right here are the dates that these dividend increases were announced, the dollar amount, and the percentage increase of the dividend. You can also see the yield of the dividend and the ex-dividend date and the payable date. Now, I also included the CAGR, or the compounded annual growth rate, for 5 years, as well as the hurdle, which is my own rule of thumb, where I'm looking for about 10% between the yield and the CAGR. And then I also included the payout ratio. Now, most of this data came from marketbeat.com. It's a wonderful resource. The last 3 data fields I pull from Seeking Alpha. Let's press on. So the first one is Costco. Well, most of us know what Costco is. It's a major wholesale company. They operate membership warehouses in the US, Puerto Rico, Canada, United Kingdom, Mexico, Japan, Korea, Australia, Spain, France, Iceland, China, and Taiwan. What I like about Costco is they make money before you even walk in the door. You have to apply for a membership and pay an annual fee just to shop there. They were founded in 1976 and they are based in Washington State. So basically, this is it's selling for about $506. Market cap is 224.56 billion. The PE ratio is a little bit high compared to its sector competitors, about 35 versus 22. You can see they're listed down there. It's primarily Walmart, Target, Dollar Tree, and Dollar General. The beta is very safe. It's a very safe investment. You don't see a lot of volatility there, a little bit more than its competitors. Dividend yield is low. It's modest. It's less than 1%. But the growth rate is pretty impressive. It's almost 12.5%. The payout ratio is safe. It's 26%. They've been increasing their dividends for 18 years. And it's not bad. The sector competitors, now remember, they're competing against Walmart and Target, and they've been increasing dividends for many, many, many years, more than 50. So that's why the sector median's a little bit higher. However, I do like Costco as a business model. The yield is small. The dividend growth rate, or the CAGR, is very impressive, and the growth of the company is impressive. They are going ex-dividend on May 4th, and the payout is May 19th. And just as you go to the top, you'll see that the increase in the dividend is an impressive 13.33%. So I'd say that is a good buy. And I am actually a stockholder in Costco. Next one. Next one is Discover Financial Services. I don't have any shares in Discover. I do have shares in Visa and in American Express. But you've probably heard of Discover. Credit card company. They provide digital banking products and services and payment services throughout the U.S. You've, of course, heard of their Discover credit card. which is issued to individuals, and they also issue private student loans, personal loans, and home loans. They were incorporated in 1960, and they're based in Riverwood, Illinois. They're selling for 105.52. The market cap is about 27 billion. That's a low PE ratio, as it is for their competitors. It's a little under 8. And you can see I listed some of the key competitors in there. Capital One, Synchrony, Ally Financial, SoFi. SoFi is the new company, which is making a lot of noise in the industry. They're very small, but and they don't pay a dividend, but it's definitely somebody to watch as well. But anyway, I'm talking about Discover. So the yield is about 2.65%, which comes to about $2.80 a year. I do like that growth rate of 12.2%. It is greater than its sector competitors. It's a safe dividend, 16% payout ratio. They've been increasing for 12 years, and they are going ex-dividend on May 24th, payout June 8th. You look at the top from Market Beat, the increase in dividend is 16.67%. So basically, it's going from 60 cents to 70 cents. That's pretty good. Next one. Travelers. Well, Travelers, as you know, is a big insurance company. They provide a range of commercial and personal property and casualty insurance products and services to businesses, governments, government associations, and individuals throughout the United States and internationally. They were founded way back in 1853, and they're based in New York City. Now they're trading for about 179.50, and folks, these prices are as of Friday, April 21st, just yesterday. Market cap about 41.5 billion. The PE is not bad compared to its competitors. It's about 12.4, a little bit less than the median in its sector of 15.6. Earnings per share 14.5, more than sufficient to cover that $4 dividend. I do like the beta, well under 1.0. And as you recall, the beta of 1.0 reflects the S&P 500's price volatility. So this is not a volatile investment. Dividend yield 2.23%. Growth rate is not bad. It's 5.25%. Now it doesn't meet my 10% hurdle. I'm always looking for that increasing dividend to be an aggressive increase. It's a little bit softer, but it's not a bad investment. It's better than its sector competitors. Dividend payout ratio is 30%, so this is a safe investment. You're not likely to see the dividend cut if you buy Travelers. The dividend growth streak is impressive. It's 17 years. It's a quarterly dividend stock. They're going ex-dividend June 8th, and payout is June 30. If you look at the top, you can see that the increase in the dividend is about 7.5%. So it basically has gone from 93 cents a share to $1. Not bad. Now, who hasn't heard of Johnson & Johnson? They're a dividend king. Little background, they research, develop, manufacture, and sell various products in the healthcare field worldwide. You've probably heard of their products. You see them in your bathroom or in your medicine cabinet. Aveeno, Sudafed, Nicorette, Band-Aid, Benadryl, Zyrtec, Neosporin. The list goes on, and it's obviously too numerous to name. They are trading at about 162.69. They are a massive company. Their market cap is 425 billion. I do like the PE ratio of 15.27. Compared to their competitors, this is a cheap investment. Their competitors are trading at about 24.77 PE ratio. The earnings per share is decent, 10.65. more than sufficient to cover that $4.76 dividend per share. Uh, the beta is fairly gentle. It's well below 1.0. 0.53 for the last 60 months has come down even more to 0.32 in the last 24 months, right in line when it's set with its sector competitors. The dividend yield is 2.93%, more than its competitors of 2.35%. I already mentioned the dividend payout dollarized. The dividend growth rate, it's not bad. It's 6.11%. It's going to get you close to 10%. The impressive thing is not that this is a hugely growing dividend. The impressive thing is that it's been growing for 60 consecutive years. But I got to tell you, I'm impressed that Johnson & Johnson increased their dividend by over 5.3%. That's massive for a company this size and that's been doing it for this long. I like the payout ratio. It's less than 45%. This is a safe dividend. It's a quarterly dividend company. They're going ex-dividend on May 22nd, and they will pay out on June 6th. Next one, Qualcomm. Well, you know what? If you've been buying cell phones for a while, you've probably heard of Qualcomm. I used to have a Qualcomm cell phone several years ago. I actually have a Motorola these days, but anyway, they've been around. They engage in wireless industry technology worldwide. They develop and supply. They're really known for their integrated circuits or their semiconductors and system software, and they base it on 3G, 4G, and 5G technology, and for use in all sorts of wireless voice and data communications, networking, application processing, multimedia, and global positioning system products. You can read more about them, but they're a high tech company. They were incorporated in 1985, and they're headquartered in San Diego. They're trading for a little under $118 a share. Their market cap's 131 billion. PE ratio is pretty decent compared to their competitors. They're at about 12 and a half versus 32. That sector median seems a little out of whack if you ask me. Earnings per share 937. It is more than sufficient to cover the $3.20 dividend per share. The beta, well, it's a little bit volatile. It's more than 1.0, but the sector is volatile as well. You're looking at price volatility in the 1.27 to the 1.3 range. That's really kind of to be expected. As an Intel owner, and I used to own a lot and I sold most of it off, not quick enough apparently. We saw a lot of competitive pressures in that sector, and it kind of swallowed them up a little. They're hanging in there, but anyway, that's just kind of symptomatic of the semiconductor and the chip market. Um, anyway, back to Qualcomm, the dividend yield is about 2.7%. It's more than their competitors. Uh, Not a bad dividend growth rate, 5.64%. It's going to get you in that 9% range, a little bit more. The growth rate's a little bit less than its competitors, but the yield's a little bit more. It kind of evens out. I do like that payout ratio. It's safe. So 25%, that dividend is safe, and they've been increasing that dividend for 19 years. This is a quarterly dividend company. They're going ex-dividend May 31st. Payout is June 22nd. This latest increase that was announced on April 12th is 6.67%. I think that's pretty decent. One thing, just and if you see a discrepancy in the dividend yield between the chart at the top and the table below it, there is a slight discrepancy because I'm using two separate sets of records, and I wanted to make a point here. The table at the top came from Market Beat. The table at the bottom has come from Seeking Alpha. Obviously, there's a little bit of a timing difference, so you're going to see a slight difference in the yield. Nothing to get alarmed about. It's fairly close. So, the yield I am showing and I'm sticking to is 2.72% from Seeking Alpha. The one from Market Beat, I think it might be a little bit off, but these will, fluctuate based on price fluctuations. So nothing to be overly concerned about. One thing I'm including here at the bottom are the competitors in the sector. You can look them up. Intel, Advanced Micro Devices, Texas Instruments, and a couple others. Those are the key competitors. And how did we get these? I'm getting these out of Seeking Alpha, and they tend to be in the same, the IT semiconductor equipment and manufacturing sector, and also by market cap value. And so these are firms of like market cap value and market or market sector, if you will. Next one, Procter and Gamble. I kind of think of Procter and Gamble and Johnson together. They're both dividend kings. They've both been around forever. Procter and Gamble has been increasing their dividend for 66 straight years. That's a phenomenal accomplishment. It's longer than many of us have been alive. They're trading at 156, and they have a massive market cap. Slight typo there. It's about 436 billion dollars, if you will, and the PE ratio is 26.61. It's a little bit less than its sector competitors like Clorox and Colgate Palmolive and a couple of the others, which are around 29. That's one thing to think about when you're looking at PE ratios. You have to look at it in context with its industry sector. It's also good to look at it in context with the S&P 500. I didn't show that here, but I have the industry sector. I think that's probably more relevant. Earnings per share is 587. It is more than the dividend per share of 376. Those betas are very gentle, 0.39 and 0.59, as they are in the entire sector. So you're not going to see a lot of price volatility with Procter and Gamble or Johnson & Johnson. The dividend yield is not bad. It's 2.41%. The growth rate for the dividend is 5.73%. So its sector competitors have a slightly higher yield and a slightly higher growth rate. But again, I'm going to go back to that dividend growth streak of 66 years. The dividend payout ratio is a little bit high for me. It isn't high for everybody, but for me, I like to not breach 60%. I'm looking for something in the 20 to 60% range. This one's a little bit over 63, a little bit over 60%. So, I would, use your judgment on that. I actually do not own any Procter and Gamble. I do own Johnson & Johnson, but that's up to you to take a look at. They have already gone ex-dividend, April 20th, and the payout is May 15th. However, even if you've missed the ex-dividend date, you can always get the next cycle. Next one. Next one is EMCOR Group. Well, what can we say about EMCOR Group? They provide electrical and mechanical construction and facility services, mostly through the United States and the United Kingdom. They were incorporated in 1987, and they're headquartered in Norwalk, Connecticut. Let's take the increase first. We'll do this one a little bit different. They announced on April 6th a 20% dividend increase. I think that's pretty impressive. So that basically, the dividend is small. It's 15. It's going from 15 cents a share to 18 cents a share. But percentage-wise, it's pretty good. The price is trading for a little under $58, a little under $158 a share. Market cap, it's not huge. It's about $7.5 billion. The PE ratio is pretty good compared to its sector. It's 17.3 versus 23.75. Earnings per share is decent. It's a 9.13 a share. And the dividend payout is 72 cents. So it's, more than sufficient. I would actually like to see, if I have my druthers, and I don't own EMCOR, but I would like to see them increase their dividend. But anyway, that's up to them. I'm presuming they're doing innovative things and they're plowing these profits back into the business. The beta is a little bit over 1.0 in the last 60 months, a little under in the last 24 months. It's kind of in line with their sector competitors, and you see them listed down below. The dividend yield is slight. It's less than 0.5%. And I already mentioned the dividend uh, payout dollarized. The growth rate is decent. So they have a decent growth rate, and it's probably because the dividend yield is fairly modest, 13.77%. That payout ratio is fairly low. So the dividend is safe. You're not going to get a big dividend, but you're going to get a consistent dividend. They've been growing it for the last 2 years. It's quarterly. They've already gone ex dividend on the 14th. The payout is the 28th. Next one. FedEx. Well, who hasn't heard of FedEx? Full disclosure, I don't own FedEx. I think it's a great company. I'm actually an owner of UPS, but they did announce a dividend increase on April 5th for about 9.6%. So they're going from $1.15 to $1.26 a share. It's not bad. They are a little pricey. They're around $230 a share. The market cap is a little under 58 billion. If you were to compare them to UPS, UPS is about 3 times the size. But the PE ratio is not bad compared to its sector. Like I said, they're a little bit pricier than UPS, but there are more expensive investments in their sector. The PE ratio for the sector is a little under 20. Earnings per share, 14.89, almost 3 times the dividend per share dollar amount. The beta, well, the beta has been a little bit high over the last 60 months, but it has come down to a little under 1.0. Dividend yield is 2.19%. Dividend growth rate is an impressive 18%. The dividend growth rate for the sector is over 10.5%, which is pretty good for an entire sector, or at least the ones that I'm looking at. But theirs is 18. I like that payout ratio of 27%. That is a safe dividend. Now they've only been increasing their dividend for 2 years, but I would say with that payout ratio, and if they have no issues in their business model, I don't see any, they should be able to keep going for many, many years. It's a quarterly dividend company. They're going ex-dividend on June 9th. Payout date, July 3rd. Next one. Next one and last one. You may not have heard of this. It's not as well known by many people, but it's called Constellation Brands, ticker symbol STZ. They produce, import, market, and they sell beer, wine, spirits in the United States, Canada, Mexico, New Zealand, and Italy. And some of their main products are Corona, Corona Extra, Corona Premier, Corona Familiar, Corona Light, Corona. Lots of different Corona products. Modelo Especial, Modelo Negra, Modelo Chelada. There's just a ton of products. Oh, Robert Mondavi Winery. Um, this is a big company. It's pretty decent. They are headquartered in Victor, New York, which is a suburb of a great city outside of Rochester, New York, in Western New York, founded in 1945. Anyway, they announced a dividend increase of 11.25% on April 5th. And so they are increasing their dividend from 80 cents a share to 89 cents a share. Not bad. They trade for 226 a share. Their market cap is 41.87 billion. PE ratio, it's in line with their sector competitors. It's about 19.34. Earnings per share 1171, almost 4 times as much as the dividend per share of 356. The beta is a little bit more than 1.0 for the last 60 months, but it has come down in the last 24 months to 0.7. The dividend yield, it's not bad. It's a little modest, about 1.6%. And the growth rate is what I like to see, 9%. So that's going to get you over 10.5%. The dividend growth rate is more, almost double its sector competitors. I like that payout ratio of 30%. It's a safe dividend. They've been increasing their dividend for 7 consecutive years, by far more than their sector competitors, only 3. It's a quarterly dividend company. They're going ex-dividend on May 3rd, and they will be paying out on May 18th. And folks, that is it. Those are the 9 companies that have increased their dividends or announced their increases for April. So I would kindly ask you if you'd give us a like and subscribe to our channel, Dividend Blasters. And please feel free to share this video with a friend or a family member. Have a wonderful day. And till our next video, God bless.